let's dive into the sizzling hot topic of Swiggy's IPO. This is one juicy update that you don't want to miss. So imagine this, over the last decade, India's eating habits have transformed dramatically. It's like the country has embraced a new way of dining out, thanks to the explosive growth of online food delivery. And guess what? The online food delivery market in India is set to skyrocket to $91.88 billion by 2029, growing at a whopping rate of 16% annually from now until then. But none of this would have been possible without the big players in the game: Zomato, which is already listed, and Swiggy, which is about to make its grand debut on the stock market. Now, speaking of Swiggy, this company is creating quite a stir with its upcoming initial public offering, or IPO. Now, there's a lot of buzz surrounding it, and according to a Bloomberg report, Swiggy might file its draft red herring prospectus, which is the DRHP, with the capital markets regulator SEBI as early as this week. Now, this move could see Swiggy join the long line of companies gearing up for their big day on the stock market. Now let's get into the nitty-gritties of this. Originally, Swiggy planned to raise Rs 3,750 crores, which is around $450 million, through a fresh issue of equity shares. But as of September 10, the game plan has now changed. Swiggy now aims to issue fresh shares worth Rs 5,000 crores, about $600 million, and an increase of Rs 1,250 crores, or $150 million. Now, all in all, if the company's board approves the new proposal at its extraordinary general meeting, which is the EGM on 3rd October, the total IPO size will be around $1.4 billion, up from $1.25 billion, with the additional $150 million coming in via a fresh issue. Now, founded in 2014, Swiggy has quickly become a household name, partnering with over 1.5 lakh restaurants across India to deliver food to millions. Now, investors like Norwest and Prosus got in early, followed by the big names like SoftBank. Even Bollywood superstar Amitabh Bachchan has picked up a small stake in Swiggy by purchasing shares held by the firm's employees and early investors. Now, Swiggy's revenue model encompasses diverse streams, including advertisement services, the sale of food and traded goods, subscription, and other platform services. Now, in the fiercely competitive world of food delivery and quick commerce, Swiggy is up against Zomato. Now, while Swiggy's food delivery service competes directly with Zomato, its quick commerce arm Instamart goes head-to-head with rivals like Blinkit, Zepto, Flipkart Minute, and Tata Digital's BigBasket. Now, Zomato currently has 57% share, and Swiggy has 43% market share in India. Now let's talk numbers. Swiggy reported an operating revenue of 11,247 crore rupees in FY24, which is a solid 36% rise from the previous year. However, Swiggy ended the year with a loss of 2,350 crore rupees. Meanwhile, Zomato, on the other hand, had reported impressive operating revenue of 12,114 crores, which is a 70% rise, and finished its first profitable year with a profit of 351 crore rupees. Now, when it comes to quick commerce, Swiggy's Instamart generated a gross revenue of 1,100 crore rupees in FY24, more than doubling from 500 crore rupees that it had reported in the year before. In contrast, Zomato's Blinkit saw a massive 160% revenue increase, reaching 2,301 crores. Now, the average order value of Swiggy Instamart is 460 rupees, while that of Blinkit stands at 614 rupees. Now, Swiggy is tightening its belt, planning to cut around 6 to 7% of its workforce. Now, this move is aimed at showcasing better profitability as it heads to the stock market. So, as the food delivery industry continues to boom, the Indian food delivery industry is at a nascent stage and has plenty of room to grow. In fact, our market penetration currently is only at roughly about 7% compared to 50% in China and 35% in the US. While the opportunity is plenty, do remember its success will hinge on how well it can navigate the competitive landscape and boost its profitability. Exciting times ahead. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.